Welcome to A Few Minutes with Marcia. My name is Marcia Clark. I'm the Senior Research Analyst at Warren Street Wealth, and I want to talk to you today about what's been happening in the financial markets. So first things first, this is my opinions built on the evidence that I can see in my interpretation, but it shouldn't be used as individual investment advice for any person or institution. So let's start by where we've been. The financial markets have been on a tear for the last couple of years. They were going up, up, up like a rocket ship, which you can see in the chart on slide 3. I have the black line here, which is the Dow Jones Industrial Average. I have the blue line, which is the EAFE index. That's Europe, Australasia, and Far East. Everybody's going up and up and up. And then we get to 2018. We have this stumble in the first part of 2018. Then we're bouncing around. We have another recovery there in the middle of the year. And then we just fall like a stone in the fourth quarter. Well, what happened? Well, there's quite a few things we've been worried about. We hear about the trade tariffs that was being discussed, the increase in interest rates, there's international tensions. So there's plenty to be worried about. But why did we decide to go on this tear and then fall back? Well, this tear was probably built by finally hitting a stable period of GDP growth after quarters of good growth and then quarters of negative, and good growth and very low growth. So investors finally became confident that it's a good time to take risk, and they put their money in the financial markets. What went wrong? Well, all of those issues have been out for several months, but what we saw in the fourth quarter to top it all off was this sharp drop in commodity prices. And I have here on slide 5, I've got the oil prices dropping like a stone. Now, why did that happen? Well, there's a big supply and demand imbalance. There's worries about OPEC and how they're adjusting supply, and we have Iranian sanctions and how that's adjusting supply. And investors just had that one last bit of uncertainty, and I don't think I like this, and I'm out. So they sell their stocks, and the stock market falls like crazy. Well, since then, we've realized that the tariffs, we're going to be able to work our way through this. Interest rates are going to be raising slower. It's okay. These global tensions, they've been there for a while. We're going to work our way through. And the supply and demand of oil that we had, this oil imbalance, this also recovers. So we're looking like we're in pretty good shape for 2019. Investors come back in the market and the stocks rally. In fact, the first part of 2019 was the best start in decades. We had 26 out of the 30 Dow Jones Industrial companies posting positive returns, and 465 of the S&P 500 companies posting positive returns. So this is a very strong start for the year. But where do we go from here is a real question. In the end, stock prices should be based on earnings. So we had really strong earnings in that fourth quarter, as reported by S&P 500 companies. The earnings growth was between 16, 13, 8%, really strong, and so was revenue growth. And these figures came out in January, which support that stock market rally. Now, going forward, the S&P 500 companies who've reported so far say their growth is going to slow a lot. These bars may look like they're about the same height, but the numbers are a lot different. This top bar is 6.7 compared to 16 for the fourth quarter. So definitely slowing earnings, not negative earnings, but slowing. So we would expect the stock market to take a breath as well. One happy outcome of that fourth quarter drop is that prices of stocks have become more fair. The investors were worried that they were overvalued, that they were maybe even approaching a bubble, which also contributed to the selling that you saw in the fourth quarter. Well, after that sell-off, prices fell quite a lot. Earnings are still pretty solid, so the price-earnings ratio gets back to a point where investors can find it attractive, or at least fair. So the blue bar that we see here on chart 9, that's the forward-looking price earnings compared to the average for 5 and 10 years. So if we look across the chart, across all these sectors of the economy, we see that we're looking pretty good, close to the average. So stock prices are okay. So there's no reason for them to crash. There's maybe no reason for them to go to a rocket ship to the moon either. So where will we go in 2019? Well, Warren Street Wealth is a broad asset allocation firm. We believe in international exposure, so we want to look overseas for opportunities to add value to our clients. So if we look at the IMF predictions for the future, we've got emerging and developing countries here going to do much better than developed countries like us down here. So we have expected growth around 2% in 2019, and here these emerging and smaller countries looking at more like 5%. So we want to be a part of that. We want to have exposure to those growing economies, and so that's what we have in place right now. If you want to look a little deeper, the IMF says that the contribution to global GDP is not really coming from Europe or the Western Hemisphere where we are. It's coming from these other countries, China, India, the Southeast Asian nations. That's where the growth is coming, and so that's where we are. So our conclusion as we look at the available information is that the markets are going to be fine, steady, slow, steady as she goes. Nothing too exciting this year, but either on the upside or the downside from what we can see. Of course, this can always change, and we're going to keep an eye on it. But we've been through high valuations. We've had the sell-off due to skittish investors, and we think that that was an overreaction in the fourth quarter. We have a recovery in January based on strong profits and the resolution, or at least the continuing discussions over these issues like interest rates and trade tariffs that we know are out there, but we think we can get through it. Because of the sell-off, we now have good fundamental values for stock prices that give us a sense that they're fair, so there's no real push up or down really from here. But where are we going? Well, we have to watch those forecasts for earnings. The companies say they're slowing, so we're going to believe them and expect the markets aren't going to be great this year. They're not going to be bad, they're probably not going to be outstanding either. And we're going to maintain our international exposure and look to capture the growth wherever we see it, which looks like it might be coming from those countries overseas. So here at Warren Street Wealth, we know that we cannot predict the future. We're just taking the information that we can find, evaluating it best we can, and then making decisions based on evidence instead of emotion. And that's what you pay us to do, and that's what we're going to do for you going forward. Of course, we can be wrong, things can change, so we're going to pay attention to the markets as they evolve, to the economic news, and we're going to update our evaluation and let you know what we're thinking every step of the way. In the meantime, if you have a little space on your calendars in March, we'd invite you to come to our estate planning seminar on March 9th here in our Tustin office. And if you have any questions in the meantime, please do call, send us a note, stop by either in Tustin or El Segundo. We want to talk to you. So thanks very much. This has been A Minute with Marsha.